We got a big week ahead of us. So this is the week of October 9th, 2023. I want to run through the market analysis and share with you guys what I've prepared for this upcoming week. So over the weekend, we have some war news between Israel and Palestine, which may move the markets and cause a lot of volatility. And so far, we have a gap down as futures opened on Sunday, but I don't want to completely prioritize this news as the most important factor in our analysis. I still want to study price action and determine what the charts are telling us directly. And on top of that, we also have FOMC, PPI, CPI, and jobless this week. So expect a lot of volatility and potentially even reduce your risk this week. So if you usually take 1% positions, maybe drop it down to 0.75% or 0.5% just to be safe. With that, let's get into the market analysis for the week. So let's start with the weekly chart here. First thing I want to do is mark out the major weekly fair value gaps. And of course, we see this big displacement from the September sell-off that we still haven't traded into yet. So I want to mark this out right here. This is a bearish fair value gap on the weekly chart. And I want to use these lines here instead of a rectangle because this is a really wide area. And I want to be able to drop down into the daily chart and see it clearly so it doesn't overlap too much with too many rectangles. So this is the weekly fair value gap right here. And let's extend that out just a little bit further. And then next, I want to mark out the order blocks. We have this order block right here that we bounced from. And that's pretty much it. We have this order block right here, a bearish order block. But this is really high up, so I don't think this is too important just yet. But you can't keep this in mind. Next, I want to mark out the liquidity levels. We have, sell side down here. We have sell side from last week's low. Let's mark that out as sell side. It's visible on the weekly chart. So we have sell side right here, here, and right here. And this weekly order block that we're bouncing from. All right. On the buy side, on the weekly chart, we don't really see too many short-term highs, so we don't really have weekly buy side until up here. So it's not too important. Then lastly, I want to mark out the consequent encroachment of this wick because we have a very long wick from last week's candle. So I like to use a fib tool, draw from low to high, or high to low, doesn't really matter for the consequent encroachment. But I have a setting here that only shows a 50% level. It doesn't show on the weekly chart, but let me make it visible on the weekly chart there. So this line shows up right here. And there is the consequent encroachment right here, 4288.5. Okay, so now we got all of those things marked out. Let's go down to the daily chart here. So what is the daily chart showing us right here? We have some downward consolidation right here. We had an order block here that got traded through. So that's not very important. But then we came down, took some sell side, and then reversed right here. And we haven't completely shifted market structure yet on the daily chart. And it's not until we get above this high right here, which is 4371 and a quarter. Okay, so until we get above this, this is still bearish order flow on the weekly chart, or on the daily chart. And this isn't a true market structure shift until we get above that level. And until then, I wouldn't say it's the best idea to go long just yet, but once we shift above this, we have a better chance of safely entering long positions. Okay, so from that, the daily chart doesn't really show too much other than that. So let's go down to the 4-hour chart. On the daily chart, we also have these daily fair value gaps in here that reside inside of this weekly fair value gap right here. And that's the reason why I use these lines instead, so you can more easily see these fair value gaps within the weekly fair value gap. Another thing I want to point out is we also have a very small volume imbalance right here on the daily chart. So I'll mark that out as well. This is right in between these two daily fair value gaps. So we have all of that marked out now. Let's go down to the 4-hour chart. And the 4-hour chart is showing us a lot more information here. Okay, so first, we do see a market structure shift above this high right here on the 4-hour chart, shifting us from bearish order flow to bullish now. So what I want to do here is actually run some fib levels off of this displacement right here that we got last week. So I'll change it to that. And now we have the premium up here, discount down here, and the OTE range right here. And so last week we had lots of lows right here that acted as sell side. We had NFP coming up to take buy side, and then dropping down to take sell side, and then rallying back up. So my bias for Friday was very long. And I was mentioning in the Discord that we're most likely going to come back and retest this new week opening gap, which we did. And what happens on NFP is we usually have engineered liquidity throughout the week going into the news event. And then on the news drop, we like to take out liquidity on both sides, buy side and sell side, and then we pick a direction. So since we took buy side first, came down to sell side, this added confluence for the long idea trade. So we had a great Friday last week to close up the week. And so now, off that price action from last Friday, it left a big 4-hour fair value gap right here. That's getting retested right now off of the gap down. So you can see that Friday's move came up and hit this 4-hour order block almost to the tick, just a tick above it. And in doing so, we also grabbed some buy side liquidity up here. So this is a great setup to go short. Taking liquidity, taking buy side liquidity and hitting a bearish order block, price is most likely to reverse. And then we also coincidentally have that news about the war going on, and it pushes back down here. So what I'm expecting to see is a repricing back down into potentially equilibrium or the OTE or some kind of a discount to go long, because I'm still pretty bullish for the rest of October, because historically the seasonality shows that October is historically a rather bullish month after a very bearish September. So this gap down creates a big new week opening gap as well, which overlaps last week's new week opening gap. These lines right here, the blue lines right here. And so I do want to take longs because on this 4-hour chart, again, we are in bullish order flow. And I do want to see a repricing back into this weekly fair value gap and the daily fair value gaps above, and potentially even the volume imbalance right here as well. Because on the weekly fair value gap, you can see that it very clearly shows this inefficiency right here that's going to want to be repriced back into. And so on the weekly chart, we came down and held this order block. I want to see a repricing back up into this weekly fair value gap, and then see if we're going to come down lower for more sell side, or if we're going to go higher and break these highs. But for now, the 4-hour chart shows bullish order flow, and there are several levels that I want to look to get into longs. One is this 4,300, where the equilibrium of this range resides. And if we hold this 4-hour fair value gap, what I could potentially see is us coming down to wick just the discount area and then come back up and have the bodies close within the 4-hour fair value gap to aim for more buy side liquidity up here or up here. Or the next level would be the consequent encroachment of the last week's wick right here at 4288.5. And lastly, we have the OTE range. So any one of these levels right here. This would be a very deep discount, and I prefer going long if we hold above this golden pocket and also above this breaker block on the 4-hour chart right here. But anywhere within this range between 4,300 down to 4283 would be an ideal place for me to go long, targeting more buy side liquidity and targeting the weekly fair value gap up here, up at 4383.5. So if I zoom back out and run the Fibonacci levels off of this weekly displacement right here, from this high where the most recent clean price swing started down to this low right here, you can see that this fair value gap resides in a premium as well. So if we came down to take out sell side, or we're holding this order block and we're truly in a buy model, I would like to see us being repriced back into here and potentially even up into a premium of this range above 4416.5, and potentially up to the golden pocket right here at 4460 to 4470. This would be the ideal draw on liquidity on the weekly chart for me. And I can see this happening with the volatility coming from this week. Now, let's say the draw on liquidity is actually not bullish and we're actually going to go lower. What would that scenario look like? Well, on the 4-hour chart, we would have to see a market structure shift back down to the downside, which would occur after we break these lows. And if we just place back down and create maybe a balanced price range or an inversion gap right here, we probably short the inversion gap coming down into these lows where sell side liquidity resides. But personally, I'm leaning a little bit more bullish because I want to see the repricing back into this weekly fair value gap right here. And also seeing the fact that we bounced from this POC right here, a lot of things are adding confluence and supporting my thesis of going to the upside for either this week or the next week. So with that, trade safe and good luck this week.